Hey guys, this is Adam from dodjit.com and this is your video briefing for the 1st of June 2009. Okay, well, we finished the month of May consolidating a little bit. We started to climb a little bit higher in the first few days of the month, but then we just retraced back. And on Friday, the Friday session was actually quite an impressive session, and we were actually looking at that session because it actually broke this wedge. You can see this wedge coming down right around here. It broke the wedge, it continued higher, and basically now we're asking ourselves where the market's heading, where are we going to, what's going to happen, are we going to crash, are we going to head higher? Let's try to answer a few of those questions and see how we're actually now starting to plan our trades. Okay, basically, so let's look what happened. During the month of March we continued higher. Look at this steep increase. Month of April we also increased, and the month of May now we've basically started to stabilize out a little bit around the 900 mark, and now we're stuck between two important levels, which is the EMA moving average, 200-day moving average, and the 50-day moving average. You can see one here and one there. Now we did break out of our wedge and we started to head higher. We can see this breakout more clearly on the Nasdaq. We can see it on the techs. And what I just want to show you here is like this. Even though we started to correct here, coming down like that, we didn't really present a massive correction. And what basically happened is we started to stabilize around this level around here. You can see we found support around this level once, twice, and we formed this type of wedge pattern, and then we broke higher. Now, does this indicate that we should start rushing into long positions? No, not at all. Not at all. Let's not get ahead of our horses. And what we are looking at the moment is like this. We are now stuck between support of this level and resistance of this level around here. And when I'm talking about support and resistance, I'm talking about our 200-day and our 50-day moving average. Now, if you look carefully at the chart, you can also see that our support level, our moving average, actually coincides with this peak here and this peak roughly around here. So we are now at a critical stage. I think many investors are now looking what they're going to do with their positions, how the markets are going to play out, and I can tell you this for sure, that if we do break these critical levels, we are going to receive this massive short squeeze going higher. A lot of bearish players in the market, they're going to start to be closing out their positions, and bullish traders are just going to be overloading with positions going higher. So we've got to look for a breakout around these areas. At the moment, I wouldn't rush into any trades. I would see how it plays out this week. We had a lot of problems last week with General Motors coming out, all the bankruptcy problems, and all of that has basically now passed. It didn't really drag down the markets. As you can see, they stabilized around the 200 mark. One thing you should look out for is the NFP results on Friday. That's normally classed as a major market mover. Take that into consideration. We could continue to see a little bit of consolidation up until the event. Again, you've got the levels. Make sure you wait for the breakouts. Let's move on to the Forex market. Alright then, now the first chart that I brought up is the euro against the US dollar. For those of you that have taken the trade, and I'm talking about trades that we posted a while back, and I'm talking about long swing trades, break of trend lines, stuff like that, and you've been taking it up on each pullback, just, you know, relaxing, taking the nice ride up, I would start to take into consideration the following level, the 1.43 level, especially due to all this clutter around here. You can see this level roughly around here between these two lines. Now, what I'm saying is like this: no need to rush and start to close your positions, but number one, if you haven't got any positions, I wouldn't think about entering the trade at the moment. I would wait for a nice pullback, or for it at least to clear this level completely. If you are in the position at the moment, either think about taking some profits or moving that stop loss higher. You can always move the stop loss according to the lows on the chart. And let's just see how it plays out. We've got important data coming out this week also that's going to affect all the different currency pairs. We've got 4 interest rate decisions coming up. We've got the NFP results coming up at the end of the week. It's going to be a volatile week, and I don't know if you want to really be in the markets, especially if you've been taking some of those nice positions and, you know, long positions. Just keep an eye out. No one's saying rush to close any positions. Just keep a tight stop and see how it plays out. The next chart is the pound against the US dollar. Now, I just want to state before we start to analyze this chart that we are in a few of the positions, but from what I'm feeling at the moment, a lot of the positions are really getting overbought. We're already coming up to this exhaustion level, and I think there's going to be a little bit of profit taking along the way. And you can just look at the pound against the dollar and see, look what's been happening. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days already we've been rallying. Now, this doesn't really occur without some type of profit taking or correction, and as we all know, profit taking or correction can always come in the form of consolidation. So I don't know, it seems to me like if you're thinking of getting into trades at the moment, keep a close eye out. A lot of the different currency pairs, they're now trading around critical levels. For instance, this level around here, we can see that now the pound against the dollar has now reached an important resistance level, 1.6472. So the way I would play it at the moment is like this. If you're not in any trades at the moment, keep a close eye out on positions, wait for the pullback, see that we break all these critical levels and head higher, and then enter the trade. If you are in the trade at the moment, keep a close eye out, keep a close stop, make sure you don't get caught out on any reversals or stuff like that. And this all really coincides with the S&P 500, with the US stock market, because we really want to make sure that we receive a nice clear breakout of all the clutter area that we've got on the chart at the moment on the S&P 500. As you can see on this chart, we are now also approaching critical resistance. This is a critical point that we saw in the past, that we touched this level, we just bounced lower. So take this into consideration. We are very, very extremely overbought on this pair at the moment. We are now approaching critical resistance. This chart that I want to show you guys, and this is the potential setup that I'm talking about at the moment, and this obviously really depends whether we're going to receive further strength on the euro. Is the euro against the Japanese yen. This is a daily chart. Now look at this. Number one, we received this kind of double top area around here. We've got this trend line coming up like this, which basically means that we've started to form this bullish triangle. Now, bullish triangles are normally characterized by a break to the upside, but as we've got this interest rate decision coming out this week from Europe, we've also got one coming out from England. So I would take into consideration that we could receive a test of our trend line. Now, if we do receive a test of our trend line and we form some reversal candle around this area, you might want to think about taking it higher. If this does break higher, I'm talking about above the 135.69 area, then this could be a potential trade. Take into consideration also that we have got this gap around here to close. Hope you enjoyed the video. This is Adam from dodjit.com.